ABC Markets Morning Call, 5th of November 2025. I'm Mark Gardner. AI thematic starts to deflate a touch as Wall Street CEOs warn on valuations. Realistically, there wasn't any sort of hard data out last night. We really just had Morgan Stanley CEO Ted Pick saying that investors should be prepared for a 15% drawdown, and emphasising that such a correction would not necessarily indicate any deep economic problem, but basically just questioning the valuation of a lot of these AI stocks across the board. Goldman Sachs CEO as well, David Solomon, shared similar sentiments, noting that valuations in the tech sector have basically reached their limits. So, look, Jamie Dimon's been saying this for about 2 decades, but I think the key thing is these guys don't normally go out on a limb and say things like that. It's kind of like when a Fed member or a central bank member who is normally dovish and wants to ease rates comes out and says something hawkish. So people tend to pay a lot more attention. Maybe that's a lesson for Jamie Dimon. Maybe don't call a recession every 3 weeks. But yeah, so those guys particularly pointing out that tech sector. So we did have the Nasdaq falling 2%. The Russell's down 1.7, but Nasdaq taking the lion's share of the heat, really. The Dow only down a half. The S&P, well, obviously sits in the middle there, down 1%. But Nasdaq obviously being the even more heavy concentration in those tech stocks. But as you can see, since that day about a week and a half ago, where we had strong buys across every time frame for every index, that literally was the high that day. And now we've got strong sells in the dailies. Not only in the SPY, what's more concerningly is a weekly neutral for the SPY, but a strong sell in the Russell for the daily, and neutral for the Dow and S&P, which, to be honest, can't remember the last time we saw anything but a buy or a strong buy on the dailies for those two indexes. So you may start to see if this move continues. Look, I would expect that the technical momentum might really start to force this down. Just to put into some context as well, 10 to 15% drawdown. Like, we're going back to the start of August. Like, we don't lose sight of the fact of how far this market is up. Like, I think we're in the last month or two. I think we're up at around about the average annual return. So I wouldn't be panicking at this stage, but as I've sort of reiterated on a number of occasions, not a bad time to be taking a little bit of risk off the table, particularly when you're in the third year of the best 3-year rally in pretty much since the mid-90s. So you just got to be sensible and not swing for the fences. But yeah, look, as you can see, the size is relative to how much weighting they've got. That whole tech, chip and IT sector just got absolutely smoked. So Palantir down 8% despite smashing earnings results. AMD fell another 4%, so it was down about 8 or 9% despite smashing expectations on earnings as well. I'll get to that a little bit later. Oracle, the balloon's definitely deflating for them. Like I said, Nvidia down 4%. It looks really horrible, but again, I mean, we're probably just where we were Friday in Nvidia. But broadly, it's you're seeing some profit taking, which really did look like it was sort of starting a little bit yesterday. I mean, all of these green sectors here, healthcare, defensive sector, Berkshire Hathaway, the most green in the financials. That's because they're sitting on nearly $400 billion in cash. So defensive yet again. Walmart, Costco, Home Depot, defensive. And then these industrials here. There's overall concerns about an economic slowdown. We're not getting any data at the moment, but the ISM manufacturing index basically recorded its 8-month of contraction. It's under 50 at 48.7. Anything under 50 is a contraction. And look, basically as well, Jerome Powell suggested the recent rate cut might be the last of this year. I didn't see that until I'm just reading here now. So that's going to push any form of rate cuts into into the new year. Couple that with the pretty hawkish talk from Michelle Bullock yesterday, basically saying we could very well be one and done, and the next move being a rate hike is definitely not off the table. Probably, a little bit of a little bit of a slap in the face of reality here is that, we were, despite expecting three or four cuts by the end of this year, can't do cuts if you're not getting any economic data in the US. That's for sure. So, and then obviously more concerningly is if and when this government shutdown finishes, which is now one of the longest in history, if not the longest, if all the data has actually been quite bad over this period, you're going to get it all in one go. So it's just going to trigger panic, which is really concerning. Really, I mean, if the numbers were largely flat, I mean, it's probably not a big deal, but the airline industry alone is claiming that this shutdown already cost them $4 or $5 billion. Because they can't get air traffic controllers and things like that. They are genuinely looking at shutting down some major airports in the US in the coming days because they cannot get air traffic controllers and staff. So the last shutdown only cost $11.5 billion, which was a 34-day shutdown, the previous record. We're looking at $5 billion alone in just the airline sector, and the bleeding hasn't stopped. So, Republicans and Democrats are, just possibly when you think politics couldn't get more childish, it definitely can. So it doesn't really look like there's any progress there at all, and anything that's being put forward, Trump's just vetoing and doing his own thing anyway. So there's this pretty systemic break in the political system over there at the moment. But we're not, stock market's not Congress, so it's they'll probably get away with more things, with the lawmakers not being around. So AMD, as I said, beat earnings. I'll show you Palantir and AMD charts in just a minute. We've got ARM Holdings, but the concerning thing with these guys is, and I'll come back to this, is AMD released earnings here. They beat revenue, they beat AI revenue guidance, they beat EPS, and this is a 1-minute chart, and they just went bang, straight down. Palantir absolutely smashed it out of the park on earnings. This is the rally up there, and essentially it would have been 4 or 5 hours ago, over the course of the day session, progressively just got smacked to being down, just down around about 8%. So that price action is horrible for two companies that have done well surpassed what Wall Street expectations were. Data center, we're just having a look at the AMD earnings here and the income statement and flow. Gaming was a big sector. I mean, up nearly 200%. Ryzen was up 46%. Data center was up 22%. That's the big dog at 4.3 bill. And then the embedded was up 38% year on year. So total revenue up 36, 52% margin, which is pretty impressive on gross profit. And then the operating margin comes down to 14%, but the operating profit margin rising by 3 basis points, so or 3%, so from 11 to 14, which is pretty good overall. To get a 15% increase, 20% increase in your net profit margins and your operating profit margins. So and expenses really didn't move. But overall, fantastic result. Yet here we are down 8%. So having a look at this chart again, it really is one of those things that a bit of a buy the rumor, sell the facts sort of scenario. Uber was also given a bit of a flogging. Soft earnings guidance down 5%. Overall, and realistically, whether earnings has much of a difference moving forward. We're still getting the 80% of companies beating on the top and bottom lines, but I'd be interested to see whether that is converting to net gains on the day after the earnings releases. Earnings have been released, so a little bit concerning there. Those, as I said, those technicals and that price action. We also saw some selling in gold, silver, all the commodities across the board. The US dollar was up slightly, up 1.5% for the week, which is kind of weighed on the gold and the precious metals sector. Bitcoin, uranium, and lithium were uranium and lithium particularly were two very hot thematics. Now showing down 9% for the week, uranium. But look, it's been on an absolute tear. Lithium as well, critical minerals. So, it's not just the AI thematic that the heat's going to come out of. Anything that was running really hot would be looking to come back off. Bitcoin below 100,000. And yeah, look, I think you'll probably, these initial moves, we do generally see a little bit of selling in the gold miners and the silver miners and things like that.